welcome back. It's now to shift gears. Let's talk about the economy. It's an ongoing conversation because, hey, things are not there where we want it to be. And naturally, when we are trying to find answers, we look for those who have the answers. At least to the best of their knowledge, they provide that expert opinion on what to do and how to go about the situation. It's a conversation that I've been having for as long as I can remember, from last year all the way to this year, and we will not stop until we find a solution to these nagging economic issues. We've been joined in the program via Zoom by a senior economist at the SPM Professionals and fellow International Management Consultant Board in the United States, as well as a fellow Institute of Economists in Nigeria, Mr. Paul Alaje. Mr. Alaje, thank you so much, as always, for coming through whenever we have to call you. Thank you for coming on the program.
Thank you so very much for having me.
Let's begin with what's been happening with the duties at the ports. About 5% reduction from the central bank. I know that the Manufacturers Association of Nigeria, DG, was here, and one of the things he lamented about was that particular duty issue. So Bukola was saying that how much of a needle has this really moved? From an economist's perspective, has it moved anything, or more needs to be done?
Yeah, thank you once again. I must say that reducing it by 5% is not sufficient. I am currently in one of the major markets in Nigeria within the South region, that is in Port Harcourt. And I can tell you that a steel of iron pool that we pulled in 2017, since we've been monitoring the price of steel, I can give you the dimension. It's about 30 inches pole. The thickness is 16 mm. The length is 12 meters. We have been checking prices over the years, and the price as at 2017 was 500,000 naira to one pole. Today, it is 6 million naira. 6 million naira. This pole is not produced in Nigeria, it is imported. And this is among many other different types of steel, including angle iron, 50 by 50 by 4 mm, which currently sold for 22,000. It used to be 4,500 just 3 years ago. So the prices have already been messed up. And that is why some persons even feel that the inflation number shared in Nigeria may not be correct. Even though inflation is not just about this, there are a few other items, even commodity item I can share with you what has happened to them between December, January, and now. Prices have continued to surge. So one of the things that cause prices to increase, of course, is import duty. So answering your question directly, reducing it by 5% is not sufficient. What we first need to come to terms with is we cannot be fluctuating import duty. It does not, it brings that difficulty for importers. And I mean those who are importing goods that will be used. For instance, if somebody imports irons or import poles, they are not using it for themselves. That's what we use in construction sites, in building factories. So fluctuating the rates bring high level of uncertainty to the purchase or to the consumer or the factories that will be using this eventually. It's important for central bank to let the economy understand at what point are you trying to target 1,300, which of course was given to BDC. That is what I was expecting the import duty to be. If you are giving BDC 1,300 on one hand, in the same market, you now give 1,500 or 1,600 to customs. It does not add up. I'm still trying to look for an economic explanation to the decision. If you are giving BDC 1,300, the knowledge, when we talk about policy convergence, you are giving BDC, who of course now operate under the central bank, you cannot be given fiscal authority at 1,500 and 1,600. Are you trying to discourage imports? If you are discouraging import, one condition before you achieve the goal is that we must have industry sectors that can produce the same. Then when you raise import duty, Nigeria will fall back to what is produced at home. So the question is, where can we buy some of those things in Nigeria? They are just not there. So I appreciate the effort of the Apex Bank Monetary Policy Committee and so on and so forth, but we cannot run away from the supply side. The the argument over the years and in more recent months, in the last 9 months, since we made that policy overdose of giving a patient who is supposed to take medication, 1 tablet in the morning, 1 tablet in the afternoon, 1 tablet in the evening for 7 days. But because we felt, oh, this patient has been here for a while, in the last 8 years, he has been healed. Let's combine all these tablets and ask the patient to swallow at once. So we gave the patient 21 tablets in the name of subsidy removal, in the name of devaluation. At the same time, what do you think will happen to the kidney of the economy? That is why we are seeing these price changes. And you could hear a price in the morning, in the evening is something else. And in even attacking that, we have seen a 400 basis point jump in NPR, which I think is taking that decision has a lot of implication in the economy. So the reduction is okay, but I can tell you that the central bank, we need to match that with an earlier decision rate it has given to the BDC of 1,300. If we don't do this, the importers will be speculating, saying that central bank is still adjusting. We don't know what the rate will be. Some of the items we have now, the rate at which they are selling was when dollar was 1,800. Everybody increased their price. It's now back to 1,540. But they are not sure if the rate will not go up again. So stability is when you target something and you want to ensure that it is the rate across board. Everybody will know that central bank is targeting it and we can achieve it all together. And as Nigerians, as researchers, we all work together to achieve that stability in our economy, because if we don't, it's going to hurt all of us together.
I'd like us to speak to what the CBN has done further, and I'm talking about the MPR and the rest. There's been diverse opinions. I think the governor of Edo State just recently saying that, well, it was a bit too much. Not the term was even a bit too much. It was not the right action to take. Yes, we understand the situation, but he says that interest rates are already very high, and jacking up the interest rates clearly will not allow small borrowers, small businesses access to credit at a price to help them grow their businesses. So it's quite interesting, because I know before that meeting, there was a call for the CBN to tighten, to mop up excess liquidity, but there was also the angle of, where is this liquidity in the first place that we're trying to mop up? So whichever way the CBN went, it was always going to be the wrong decision for some people. But how do you see this, particularly for those who have small businesses, those who are really impacted by this situation? What are the options available for government, and I'm talking monetary and fiscal, to maybe ease their situation further?
Well, there are options for government. Whether government has taken the option is another kettle of fish. 2, there are economists, and especially what I've heard in recent time and what I've observed in the public space and in the media space is that government seems to have this continuous romance with classical economics, those who want to have textbook manifestation, that when you raise interest rate, which is exactly what central bank has done, textbook teaches, and I mean the intermediate level of knowledge in economics. It's important I add that to it, that when you raise interest rate, within a short period of time, inflation will come down. My concern here is that we have done that over the years. Governor Emefiele continue to increase interest rate to above 18%, rather than price coming down, it keeps going up. What is the implication? As we are mopping more from the economy because we thought it's money supply, one of the reasons why we even have the policy we had regarding Naira, not denomination, we have regarding Naira, that's introducing new Naira notes so that people can bring their money to the vote. The question is, has that reduced inflation? The answer is no. I'll be very sincere with you. Raising MPR on 400 basis points is the first time in the history of Central Bank of Nigeria. So that policy itself will not go without its implication. The first implication is that the policy is anti-growth. When you raise your NPR like that, it will have implication on your gross domestic product growth rate. So the GDP growth rate will surely be hampered by this policy. Number 2, I will tell you the benefit of the policies too, because maybe I should start with the benefit before I go to the deep concerns that this policy has. The first benefit of this policy, central bank is trying to target, is using inflation targeting method. That is, we have written in the budget that we want to achieve 21% inflation rate, which already is an high inflation rate. 21% is even high inflation rate. Crossing to 30%, you're already in hyperinflation rate. So we are supposed to be having 6 to 9%, but central bank is targeting 21% and says if you jack up interest rate, will we achieve this? So, and it is possible too. Central bank is looking at having foreign direct investors come into Nigeria. But you now ask for what interest? Because when investors come, they are looking at, and I must say that it is not, the target is not to bring in real investor. The target is to bring in portfolio investor. So if you bring a portfolio investor, of course, which we all know that with the slightest challenge with the economy, it is easier for them to lead the country. And this is what we have seen, not just with President Tinubu, President Buhari, President Jonathan, from President Obasanjo to date. Anytime there is slight crisis with the economy, portfolio investor will always lead. So if you are targeting the same to come, what rate will we give them? Are we going to give them our treasury bill or bond at nearly 30%? The answer is no, maybe 25%. At that time, they are still going to lose. And these guys have investment analysts. They will hire economists like us and some of the persons you invited to your studio to do the job for them. We analyze, if you take this decision, this is what you have. So rather than us building our economy to be stable, that's not what we are doing. We are looking for quick fixes so that we can come out of the crisis and start having some inflows very quickly. Yes, that is important. The question is, what is fiscal and trade authorities, what are they doing about this? So I've told you the target and this what central bank is looking at in order to achieve some of these goals. But what are the challenges with it? I've told you the implication on growth. The second major implication is unemployment. You see, as we have increased the interest, as the interest rate has been increased, bank will be writing their customer to say, the money you borrowed when MPR was 18.75%, now that it has been increased of 400 basis points, there is that increase. And you can survey this among business people that borrow money from bank. If some bank are magnanimous and they don't do that, new persons that want to collect money from bank, they are going to increase the rate from what it was before. What does all of this mean? We have crowded out investment. And when you crowd out investment, you've also crowded out employment. So unemployment would increase. Someone may say, but unemployment just increased to 5%. No. The unemployment that increased to 5% is those who cannot get job 1 hour in a week. And I'm sure that is not what you desire. We are looking at 8 hours. I mean, we are looking at 40 hours a week. That's having 8 to 5 in terms of employment, or worst case scenario, 20 hours a week. And if you ask the Bureau of Statistics to share the numbers with you, I'm sure it may cause of deep concern within the current economic quagmire. It also has implications for markets. You know, the capital markets is celebrating growing in leaps and bounds. As government increases the debt market rate, that is treasury bill and bond, you have seen federal government bond, FGM bond, you have seen treasury bill also increasing. You have seen quite a number of debt market, that low risk market, increasing rate. It's going to cause disincentive to the capital market. There are a few other things which I think should have been thought through properly before the policies were made. What are the options? If I can answer the part B of your question, the options are there. Fix the fiscal side. Fix the fiscal side. The current inflation that we have in Nigeria is not demand pull, it is cost push. You have spoken about custom. The cost of custom, the custom is charging has an implication on prices. We also know that farmers are being killed. For those of us who also have the privilege to operate in agro-allied, we can tell you that farmers are finding it difficult to also make some production and output for us to consume in our factories.
If I may come in there, it looks to me like, you know, the policies are well-intentioned, but they seem to also be counterproductive as well. Despite the use of all these economic terminologies, you know, well-intentioned to reduce inflation to 21%, increase portfolio investment. What Nigerians are really more concerned about is if in the overall it's going to reduce the price of a bag of rice from 75,000 naira to 35,000 naira, which was really high even when it was at that, you know, price. I'm glad you also mentioned subsidy when you were talking earlier, which has, you know, called for good reason to review. Since the removal of subsidy, what we've seen is an astronomical increase in the price of petrol, even when government was not adjusting it officially. What we have now is 650 naira per litre, and that's a moderate price in this part of the southwest. We've seen a palliative distribution program that has not really been effective. We've seen, a payment of 25,000 naira to certain households that really, we cannot verify. So my simple question to you is subsidy removal working?
Subsidy removal is working for government because revenue government share at FAC has increased. When you see before subsidy was removed, government shared, and I mean the three tier of government, federal, state, and local, they shared between 400 billion naira to 600 billion naira before subsidy was removed. Upon the removal of subsidy, that jumped to about 1.1 trillion to 1.8, 1.9 trillion. That is humongous. That is huge amount. Monies that has been paid on behalf of Nigeria by three tiers of government is now going back to the government coffers. Now, the thing is, the intention was that when this money goes to government, government will now spend this money majorly on capex. Recall that the budget of most of the states had been 70–80% recurrent expenditure. In fact, some states that they don't even have money to do anything other than to pay salaries. And the salary is not even up to minimum wage. And now, most states has more money. Federal government has more money. The question I ask is that, where is the capex upon this increase? It is not there. So government is not injecting into the economy. It is not impacting the economy. What do you see? Increase here and there. And this is why some of us warned very vehemently that before subsidy is removed, let there be steady production in Nigeria. Either government-owned refinery, privately owned refinery, they must work before you remove refinery. Before you remove the subsidy. As if those were not enough, haven't seen all the removal and some other policy, we now added devaluation to it. And I tell you, that would lead to constipation, or what we call a policy overdose on the system. And this is why today, minimum wage is not sufficient. Even if you pay labor 60,000 naira, definitely it will not be sufficient. I'm not promoting paying 1 million naira to labor, but I can tell you that we still have a long way to go as a result of some of these policy. Another one has added to it now, an humongous 400 basis point increase in NPR. The more we take a reverse gear and reconsider the economy holistically, namely coming from fiscal, most importantly, trade, and with all the positive decision in recent time, central bank has taken before this 400 basis points increase and adjustment of CRR. I tell you, I think we need to have that discussion they need to have that discussion among the real drivers of the economy.
Mr. Laji, I'm glad that you were categorical. You said that subsidy is working for government, not necessarily the people. So if it's working for government and not the people, who should we be asking about the savings on subsidy and why it's not profiting the people? Simply put, I'm asking you to rate this government on transparency. Where is the increase of savings on subsidy? Where is the monies paid to households, 25,000 naira per month over a period of 3 months? If indeed that's happening, shouldn't it have a trickle effect on the economy?
Well, the big question there is, shouldn't it have the trickle effect? We all know how money is shared because the FAC allocation is transparent already. We have access to it. It's all over the media. We can see it also online, how much has been shared by different tiers of government. What we don't have access to is the spending of this money by the 36 states and some parts of our federal government have shared. So it is now the report we have. But when you look at what has been spent and you go on ground to states to compare the two, I tell you that is a far cry. But let me also say this, just to play the devil's advocate. You see, when state government thought, oh, we now have more money, what they did not understand is that you are still going to go to the same market citizens of the country are going to. And guess what has happened in that market? prices have increased. Contractors, local and foreign, coming to work with Nigeria, we also charge government more. So in the real sense, we have not done anything. We are just playing around prices. To build an economy, you must build a robust agro sector and manufacturing sector. That is when, even if you remove subsidy or not, you would have an economy whose trajectory is upward growth. Growth, progressive. So, but that is not what we have seen. So, in spite of these nearly 500 billion naira adding to government covers, or 1 trillion naira adding to government cover, the impact is still very minimal. It's not trickling down. People are not benefiting from it yet the way they should. We have got 25,000. The question is, how many people can get 25,000 naira? How many families can get 25,000 naira? Compare even an average family that earns 50,000 naira or 40,000 or 60,000. If you have 25,000 today, what gap would that fix? Is it going to feed the gap of rice? Or is it transport? Or is it to fill the gap of cocoyam? Or is it to pay electricity companies, the discos, with the kind of increase that they have added to it? What exactly will the 25,000 naira do? These policies have been adopted. Similar policy was adopted in Indonesia, in China. And that is why I said those in authority should please take time to read literature. Because those who are promoting classical system, which Nigeria is is adopting now, they fail to read some literature. The literature had already told us that there is limits to how you may want to turn your economy to a free market system. Free market system is not wrong, but it has its own limits. And we seem to be going beyond those limits right now, because we seem to be happy with the sweetness of the economic conversation and expectation within the economy. Economy requires balance. I am by no means supporting a socialist system. No, it has no place. But economy must be balanced. The welfare of the people must be paramount.
All right, Mr. Alhaji, it looks like the very short-term measure is a bit counterproductive, because they're looking at FX accretion so that we can bring in, whether it's FPI mostly and maybe some bit of FDIs. They're looking at also using that policy to, as you said, to douse inflationary pressure. But the local economy is suffering because it's slowing growth, because of high numbers that will have effect on cost of goods as well as drive unemployment. So it's a bit convoluted for people who are looking at that space. But let's bring it down to what Bukola has been saying, and all of us have been saying, how prices will go down. Let's do a bit of geoeconomic mapping of the country, because more monies are now being given to state government, which in itself will increase money supply if they spend it wrongly, if they don't spend it rightly. So let's do a bit of geoeconomics across the region. And I'm going to posit like two places, north, south, and maybe north central. For instance, Bayelsa State is not over 90% dependent on FACT. Benue State, for instance, most of their monies come from FACT and AIDS. IGR was barely about maybe 15 billion as at 2022. So some of these states are not viable when it comes to, they will go belly up without FACT. Now that they have more money, what can they be doing besides this ad hoc, short-term, knee-jerk, quick-fix measure to really, really revive the economy at the local level? Because now let's leave the federal government and go to the states and the local government. I've used two states as an example.
Fantastic examples you gave. Benue State, fantastic example. Bayelsa State, fantastic. In fact, I may want to add Gombe State to it. But before I say that, I must also say that, you see, this conversation, this question you asked is perhaps the reason why central banks say there is excess money supply in the system. Because central bank have measured money that have been pumped into these states, or money that have been pumped directly into overall economy, and it could trace that M1, M2, sorry for my technical term, money supply has increased. Now, what the central banks could not do, or does not have capacity to do, is to say that this money that has gone into the economy now being interpreted as increase in money supply, where are they? You now need to talk to fiscal, which is now government, or you need to talk to trade, which is the government, to find out where these monies are. And in the training of central bank, if there is excess money supply, what we'll do is that we're going to use different instruments, maybe open market operation, increase of NPR, raising CRR, liquidity ratio, which are the tools central bank is displaying. But there is a disconnect. That is why the goal of central bank will not be achieved, because there is a disconnect. When you go to states that has now received the money, aka Benue State, Gombe State, and Bayelsa State, there is no plan. So how to invest the money in the system? And there are quite a number of things that could be done. We have talented individuals in those states. We have small-scale businesses in those states that I think government would have partnered with to say, if you can increase your output by 30%, 50%, government, through an agency of government, will support you with an XYZ amount. Rather, what you see is a road that does not require an overhead bridge. Government wants to build bridges. So there is an obsession that my administration has built a bridge and they want to name the bridge after themselves or their cronies. The question is that with a state that is languishing with hunger, poverty, and deprivation, if you put an overhead bridge where there is no traffic jam, the question is how much of impact have you had? Some states should focus on agriculture. That is where they have competitive advantage on. If you talk about states like Lagos with heavy traffic jam, then it's reasonable. But there are some states with, when you go there, you ask concern, because without federal presence in those states, honestly, you wonder if they even have the presence of government in some places. So we have some states like Benue State who should be producing in mass and should attract, and I think this is what I would want to advise the governor. I know the governor is new, but how much of private investors can the governor attract? We have seen what has happened in Abia State. Can the state governor speak to his colleague? It may take 5 years, it may take 6 years, it may take 10 years. If what the private sector needs from Benue State is regular power supply, because of the abundance output of agro produce that comes out from Benue State, and some are wasted every year, such that we can attract factories coming to those states. Let us have both private and public investment in this state, but that's not what we have. But because of humility now, there is little or no question that is asked from states. So instead of all of us speaking just to federal government, I think there is a big job, a big concern as to what most state governments are doing. And this state is not limited to the 3 in the example, at least 30 of them, because of their performances today. And I've said, if this is not done, unfortunately, which is not being done as we expect now, the pressure will continue to mount at the federal level. I don't know how many warehouses
Pardon me, it's quite interesting how far we've come. And I know that debate will go on and on. How, a lot of people weren't talking about state governments, particularly when this government, when it's coming to power. And I'm talking as far back as 2015. All of the blame was, federal government is at fault. But I think now we've come to that epiphany that it's not just the federal government, it's across board. We've seen what some states are doing. Again, the question is, how are people holding to account their state governments and local governments? And that's why it's essentially important to have this conversation. Hopefully people will take a lead from that. Abia state government just put up a committee for 35,000 naira minimum wage. I mean, Labour said 1 million, 35,000 naira. But some will say, at all, naim bad pass. But I'd like you to speak to us on what you expect the state governments to do this week. Not next week or before the end of the year, this week. We know that 42,000 metric tons of grains will be shared this week across the 36 states. The federal government announced that. But let us put the state governments, fine, let's put them under pressure. What do you expect them to do this week? So people listening can begin to ask their state government that this week, this has to happen at least for us to get some reprieve.
Well, quite a number of things. We've seen the president has released 42,000 metric tons, distribution of those so that we can reduce the ongoing, should I call it, breaking of factories, mostly that are owned by private sector, and bringing out food items that is moved from one state to another. There is little the state government can do this week, but there is a lot they can do in terms of communication and in terms of their plan as to how they will achieve that, maybe in the next 1 month, 2 months, or 3 months max, to be realistic. Here is it. What are the major concerns that we have? Money supply has increased to the hand of the states and local government. I put local government in inverted commas, because they hardly exist. I travel a lot to states. I see the presence of federal, state government. I don't see the presence of local government in most cases. So what should we be doing? Number one is agriculture. Most states has comparative cost advantage over others in agriculture. From Irish potato, when you talk to Plateau State, to cashew nut, when you talk about Kogi State, and a number of other states, including cocoa, palm oil, some of the things that we consume, potato, all of them, rice, and so on and so forth. But what we don't have is that, apart from the last Kebbi State governor and his government, that directly partner with federal government and the people for massive output in agro, in rice paddy. I can tell you that most other states folded their arms. And I tell you, as somebody who is a practitioner in that sector, I would want most states to announce what program they want to run. And I don't mean sharing money to anybody. In the next 2 months, we want to run XYZ program. They have vast land. If you check, kidnapping activity is happening in states. Even if they kidnap a person in one location, they will perhaps take the person to one state soil, one local government or the other. So those land that nothing is happening in those regions, can we convert them to farm? The land goes to the states. So if the state says we have 500 hectares of land, we have announced that it will be used for farming activity. Register young people, area boys, beyond area boys, people that have no job, graduates, non-graduates, that have no job to do, and this is what they want to do. And government must say that this is what has come to us as a result of increase in subsidy. We want to move all of this money into agro, or 50% into agro processing, to end hunger. If churches and mosques are now saying that we don't want to build structures again, what we want to do is that we want the money to feed people, then the governor should smell the coffee. What I think they should do now is 500 hectares of land should be dedicated, and people should have them. When you do that in 6 months to 1 year, then private millers, private investors will come. Foreigners will come. But if you want to use price adjustment to woo them, they are wiser than that.
All right. Umar, thank you so much. Quite an insight on this particular issue. But it's an ongoing conversation. And as much as possible, we'll continue to bring you in an expert like you to give us perspective on this issue. Mr. Paul Alaje is a senior economist at SPM Professionals and fellow international management consultant board in the U.S., also a fellow Institute of Economists here in Nigeria. Thank you so much for coming on the program.
Thank you so much for having me.
Absolutely. Well, I will continue to say, so keep that conversation going in your local government as well as in your state government. Maybe what some of us here will do is to try and look for places where you can check exactly how much is coming to your local government. Some of you will be shocked. Well, if it actually gets to your local government, that's if the governors of those states allow you to get to your local government, because that's a debate. But we're not done with the economy. When we come back, we're going to talk about another aspect of the economy that has to do with the crypto space. Join us again.